In this video, I want to expose you to a growth ETF you may not have heard of. It's GARP or GARP. And I'll compare it to QQQ, which is probably one of the better known growth ETFs out there. QQQ just follows the NASDAQ 100, but GARP has been beating the NASDAQ 100 over the past 1, 3, and 5-year periods. Now, the NASDAQ 100 or QQQ, again, it just follows that index. GARP actually looks for high growth companies, but also has a metric that filters out the ones that seem overpriced. Okay, so let's get into this. Now, first of all, GARP has been around since January of 2020. QQQ, of course, goes back a long ways, but QQQM has been around since October of 2020. Price per share, $72 for GARP, QQQM, $267. All of the figures in this video are as of April 20th of this year. The dividend yield, now nobody's buying a growth fund for the dividend yield. Most growth funds have a pretty low dividend yield, and these two certainly do. Now, the expense ratio, both of these are very good. Number of holdings, QQQM tracks the NASDAQ 100, so it has 100 companies in it, but it actually has 101 shares in it. Now, GARP has 147 companies in it, so it's slightly more diversified and it's not quite so top heavy. Now, the PE ratio is pretty similar, but GARP's slightly lower. Now, most growth funds, especially when we look at the top 10 holdings, look very, very similar. But these two actually are quite different. In fact, the overlap by weight of these two growth funds is only 31%. And they only have 16 holdings that are the same. So let's look at the top 10 holdings of each one of these. QQQ, of course, is just going to look like the NASDAQ 100. The largest company in the world is NVIDIA, so it gets the largest percent of the weight. Then we have Apple, Microsoft, Amazon, Meta, which is Facebook, Tesla, Alphabet, which is Google, Broadcom. Alphabet has 2 shares of stock, and then Walmart. Now, if we come over here to GARP, its largest holdings is a company called Lam Research Corp. Now, it's a company that makes the equipment that helps shape and build the tiny structures that go inside semiconductors. Think of it that way. That's a simple explanation. Then we have NVIDIA, Meta, which is Facebook, Microsoft, Apple. Then we have KLA Corp. Okay, so KLA Corp builds the equipment that kind of helps check to see if computer chips are built correctly. Then we have Alphabet. Then we have a company called Amphenol Corp. It builds the connectors and cables that link and power electronic devices that maybe go into data centers and cars and military equipment. Then we have Visa and Micron. So you can see there's some differences here. And notice the weight here isn't quite as high as over there of the top 2 or 3, okay? So GARP is going to be slightly more diversified. Now, let's get into performance, because that's what really matters. Now, since they both existed in 2022, I like to look at that year because that's a year the overall market was down quite a bit. Now, we usually use the SP 500 to represent the overall market, and the SP 500 was down 18% that year. Growth funds are more volatile though, and the typical growth fund that year was down between 30 and 40%. QQQM was down 32.52%. GARP was certainly down also, but not quite as much, 26.74%. The 1-year annualized return, now again, this is as of January 20th, or excuse me, April 20th. So the 1-year annualized return is 50.32% for GARP and 46.4% for QQQM. The 3-year annualized return, 30.45% for GARP, and for the NASDAQ 100, 27.77%. And the 5-year annualized return, 17.14% for GARP and 14.73% for the NASDAQ 100. Now, let's take a look and see over a 5-year period how much difference that makes. Well, the total 5-year return going back from April 20th. For GARP is 120.37%, and for QQQM, 99.43%. So you can see it makes a difference over a 5-year period, the total return of about 21% more. Now, a few things to take away, I guess. QQQ or QQQM is great for investors that want exposure to very large cap companies, especially devoted to tech. Okay. It doesn't look for whether they're well priced or not. Okay. The NASDAQ only has non-financial companies in it. Okay. But it's a very good growth ETF. GARP was probably better for investors who want some growth, but with more built-in discipline for quality and price. Okay, so it looks for growth, but it also looks at the balance sheet and filters out companies that may not have a strong balance sheet and low debt. And it also looks for value, so they're not overpaying for growth. Now, that doesn't mean, even though GARP has been outperforming the last 1, 3, and 5-year periods from April 20th, it doesn't mean it always will. Okay, in fact, in a very strong bull market, QQQ or QQQM will most likely probably outperform GARP because it's heavily weighted to the large cap tech companies that drive the overall market. However, in more of a sideways or a down or a volatile market, okay, GARP will most likely do better because it filters out for reasonable priced stocks. And it would also tend to have a little bit more downside protection, probably for that reason. So anyway, if you have not heard of GARP, it's just another growth fund that you could consider if you are looking for a growth fund. I hope you found this informative. Hope you hit the like button, and thank you for watching.